Hey guys, gold streams here, coming up to the end of the week. It's Friday, so the trading week's finished. Best thing that I like to do over the weekend in terms of trading is do a bit of simulation, do a bit of back testing, and obviously just sharpen your short sword. You'll constantly have to work on your skill. So what I use here is Soft 4X. It works with MT4. It's actually really good simulation software. So the first thing we need to do is obviously pick a date. So we've got a random date here. Let's just do from, I don't want to go too far back, so let's go October, whatever, October the 1st, okay, 2024. And you want to be, obviously you don't want to go too far into December. You want to keep it within the trade ranges that you trade, and you want to keep it sort of within your trading rules. So whether that be your session, that be your pair, what you want to do. We obviously only want Sundays, and you don't want to go too far back on the dates either, because then it becomes pointless. So it's given us 5 dates here. Okay, so we've got the 20th, 27th, 10th, 17th, and the 1st. All right, fantastic. It's given us a nice range. Take these, put here into just a random picker. So just pick one at random. Perfect. So we've got the 17th of November. All right, great. It's giving us our date. You can download this software. You can constantly download data in it as well. So keep it updated. You know, so it was the 17th. Keep it updated. Make sure you've always got the up-to-date charts on there. Just leave that as it is. All right, fantastic. Pip size, I think we need to set that to 100. All right, we start a simulation. So we're going to be simulating gold. We're going to be downloading the charts that I use, and I'm going to show you exactly sort of how I trade this strategy and how I've been trading it profitably for the last year. We're going to go through that sort of step by step. Perfect. I'll close this off. First thing we want to do, I want to fix this chart up and get it ready for you guys. So, all right. Cool. So this is the 4-hour chart. Let's bring this back over here. Okay. I just got to do this for all the time frames. Scale fix. Now with simulation, guys, you want to obviously keep it as relevant as possible. Simulation is great if you're especially starting out. I think it's probably the best investment you can make. Get a simulation software for yourself. It allows you to really sort of just work on your skill, master your craft, so to speak. And if you can do that bit, and you can do that bit successfully, then the only thing left to do is obviously work on your emotions, and the psychology behind trading. So that's why it's sort of really healthy to make sure that you do simulate and you do keep up to date with the skill, and you're constantly working with it. So we're going to open up sessions here. Okay, fantastic. So this will show us exactly what session we're in. Got our bars, right? So okay, so we want to be here 6 a.m. So it's 2 hours before London, basically pre-London. Got a trade here, and obviously exactly like you do in the real markets, you'll come in. Okay, so this is 234 pips, right? As you can see, that it's not, when you're used to using C-Trader constantly for trades, jumping on a different software, always have to sort of be active on it. Okay, so we're just going to do that. Okay, so we're going to mark our resistance and supports. So we've got support here. We're going to, can you copy this? No, do another one. Fine. And we've got gold coming up to a resistance here as well. Now, bear in mind, this is the 4-hour range. We're going to clone these updates. I know there's going to be market structure here, especially on the 30-minute and the 1 hour. So we're just going to go back. So we've got a bit of market structure here. We've got a lot of clean range on gold. A lot of clean range on gold this morning. Um, so this is actually really good. Let's give us a nice platform. So clone these. Okay, perfect. So now we go into sort of, we can see so understand sort of the range and how the resistance support level are identified and what everything means. So as you can see, you come in obviously and you identify your ranges first on the 4 hour, and you go down to the 1 hour because each candle tells a story. So that's one thing you've got to keep in mind. You go to the 1 hour and you'll see that okay, you've identified sort of a lot of clean range. You can see exactly what's happened. You can see there's nothing really going on to the left hand side. So you're not 100% sure whether gold can come down and fill this range, or is gold going to create a support and then come up and sort of continue the bullish momentum, and is this just sort of a retest? So you have to keep in mind, and you have to come down to sort of a smaller time frame and see exactly what's happening. Now, when we come down to the 30-minute time frame, what we can see here, it tells us a whole another story, if you like. So we can see that gold had, again, yeah. So we can see that gold had here a little range of its own. So it was in a little consolidation period, obviously between London and Asian session. And you can get this information obviously on the 30-minute chart now. It's a lot more clearer. So now on the 30-minute chart, what this is doing is giving us a very, very good structure. We've got support here, got resistance here, got gold coming down, obviously come back up, retest the resistance. It hasn't broken that yet. I do want to see what's on the left hand side on the half an hour candle as well. Okay, cool. So this is the clearest sort of range, and it's 140 pips. So it's a massive range on gold there. So what you want to do now is obviously you've marked your zones, you've had a look at everything and seen what your trading ranges are. This is obviously a very, very good setup that's showing up on gold at the moment. So we've got well, like a 37 pip stop loss potential, and you've got loads of range even on the 15-minute time frame, a lot of clean range. So you've got two options here. You can either do an entry straight away, okay, and expect price to go down, or you can sort of wait and see what the market does. Now this candle's got no top wick, so because it's got no top wick, it's showing a very, very good, obviously bearish, very, very strong, should I say, bearish momentum. So I'm going to put in a sell here on okay, visual mode. So let's try and do this. Okay, fantastic. There we go. So the first thing you want to do, obviously, set your take profit. That doesn't matter. Set your stop loss, and this is sort of what I like, what I do on with magic keys as well. So I don't care what lot size I'm using. I merely base my positions purely off risk. So as you can see, we're risking 2%, $200. It doesn't matter if I move the stop loss 100 pips, 37 pips, 38 pips. That's my risk. Okay, my risk is 2% in the market, and you can see the range down there. It's crazy. It's 140 pips. We'll be very, very happy even with 80 pips on this trade, but we're gonna see how it plays out. Play the market, and you want to speed this up a bit here, guys, and just see how the market sort of plays itself out and what it does. Yeah, so we can see the time here. Now, the one thing that I don't like about this trade already is just the fact that it's come down straight away and it's decided, for some reason I can't move this down. Okay, cool. And it's decided that it's going to break the lower wick. Okay, so now I'm very wary in terms of actually managing risk, and I'm going to use a 15-minute time frame to manage the risk. Okay, let me just open up trades so we can see here exactly what's going on. So you can see here, this is 10 pips profit at the moment. Okay, let me put the profit in pips. Okay, so this is 19, nearly 20 pips profit at the moment. Okay, it's the first trade of the week. You never want to get too greedy with the first trade of the week. you obviously want to see exactly what can go on in the market. You've got to bear in mind that right now, literally a 5 minute candle has given us 25 pips. Okay, now 25 pips. It's not sort of it's not a bad trade to take on the first trade that you take. Um, so what I'm going to do here is I'm going to close 70% of this trade. Okay, and the reason I'm closing, I'm going to put stops to break even. The reason I'm closing 70% of the trade and I'm not letting the whole trade run, even though there's a lot of cream range, is purely because of the fact that this candle has not come up and it's not given us a top wick at all. Right, so this candle is showing a lot of bearish momentum. It just literally, it's just opened up. So it's 5 minutes into the candle. There's a lot of times I see this on the market where gold will make a move like this and it will come back up and it will start making the top wick. Now, if it comes down and hits our take profit, great. It's an amazing trade. It's given us a good bit of money. As you can see, we're already up 1.3% on the account at the moment. So we're doing very, very well on our first day. Now, as long as if this trade wants to come in and give us full amount, great. If it doesn't and it wants to sort of turn back and hit our stop loss, we've taken something out of the market, right? And that's the main thing. I'm just going to speed this up here because at the end of the day, if it's break even, break even. There you go. So this is what I was talking about. I've seen this happen a lot of times. Ideally, what I'd want to see in a trade like this and how I would let a trade like this run is, excuse me, if gold made the top wick, came up and sort of hit this level, and then decided to start coming down, I'd be a lot more comfortable holding the trade like this. Right. So if we look at closed trades, trading history, cool, 25 pips, we've made $90 in profit of 25 pips on our first trade. Now, $90, it's a very good amount of money to make we was in that trade for what, 5 minutes, 4 minutes, right? So now we put ourselves in a position where we've come in, it's Monday morning, it's the first day of the week, and we've made very, very good profits already. Should you sort of be interested in taking further trades at this point? That's all up to you. I always like to stick to 1 to 2 trades a day, and that's sort of what keeps me comfortable and it's sort of managing my risk. That's all I'm interested about. This is a very, very good opportunity for a buy, by the way, guys, at 59 pip range. Yeah, you got a stop loss around 28 pips. That's fantastic. But this is where you make choices. This is where you have to think to yourself, right? Do I want to risk my $90 that I've made and possibly make maybe another $100, $200 on a Monday, or do I want to keep my profits now and call it a day and move into the next day, right? And this is what simulation sort of allows you to do. It allows you to test these things in theory and test this whole thing out for a week and see where you end up at the end of the week. You know, but this is a great opportunity for a buy, and I just want to see how this trade plays out. Even though it's a simulation, I still like to stick to my rules, right? I still like to stick to my rules. Remember, I'm not in the markets to gamble. I come to the markets to see what the market can give me, and it can give me a good opportunity. Right. See what it does. So it's a good thing we didn't enter that buy because we would have been stopped out. And that's what I was saying about you have to make decisions. Right. So let's move on to the next day. So we're into London Open now. We've already taken our trades. We're going to move over into Tuesday and obviously the next day and see sort of what Tuesday can give us from the market. So that's 6 a.m. Okay. So exactly the same procedure. We come up, we'll put, this is perfect. So you go, it's reached a 4-hour resistance level, which is going to probably be a strong resistance, which is going to be good. We've got some good ranges of gold. Right, fantastic. So this is going to be this over. Right. So we've got, okay, so that resistance stands on the 1 hour time frame as well. See here, that resistance stands on the 1 hour time frame as well. Okay, so we know that's a very strong resistance. We've seen now two 1 hour candles, two hourly candles are closing bearish at this resistance. This is an exhaustion candle, so I don't like the way this closed. I'm going to see what this looks like on the half an hour now, on the 30 minute. Okay, this is why I prefer C Trader. But yeah, so with with this particular one, we can see now here that there's more market structure on gold. And as you can see, it's similar to yesterday's market structure. And that's the cool thing about the market. The market will constantly give you opportunities day in, day out. You know, you don't have to chase a certain position. You don't have to try and, chase anything in the market. The market's going to give you constant opportunities to make money. You know, you don't need to worry about it. It's going to be it's sort of repetitive. It repeats itself. I'm just trying to scale fix this so it makes sense. All right, cool. There you go. I think we're sorted out now. Right, so you've got a bit more market structure, as I was saying, 30-minute time frame here. Okay, that's perfect. So you've got 30-minute structure on the 30. Now you can see it's pretty much the same thing that we saw yesterday. We've got a massive range to the downside of around 80 pips. We know this is a very, very strong resistance level on the 1 hour, on the 30-minute, and on the 4 hour. And we know we've got a lot of clean range for gold to move up from that particular level as well. If we look at gold on the 30-minute and then on the 15-minute as well, we can see that this is also creating a support here at 26, 21. So we know that that's a support on the 30-minute and the 15-minute at this point. So we know that gold's sort of consolidating in this 25 pip area. Perfect. Is this going to be sort of a good time? Yeah, if we get a breakout up here for a buy, it's going to be great. If we get a breakout down here for sales, it's going to be great. So we're looking at very good market structure at the moment, as long as we can be patient and wait, right? So we've already made nearly 1% for the week. It's Monday. We're taking it slow and steady. Obviously, constantly ready to manage risk and be in control. So let's speed this up a bit here. See exactly what the market does. So as you can see, it's made an exhaustion candle in the 1 hour. The 4 hour looks like it's got potential to flip bullish. And the best way to sort of be determined of where the market's going to go and what your position is going to be, you're going to have to wait for a candle to close. In this case, the nearest candle for us to close is the 15-minute candle. We're going to keep an eye and see if that can give us an entry. But you have to look at each time frame and understand that each time frame is going to tell you a story. So what the 4 hour looks like, the 4 hours reached quite a good resistance. This is closed just above resistance. This candle looks like it's just coming down to make a bottom wick, and it can flip better bullish. The 1 hour time frame, it hasn't broken the low. It's respected the low. It broke the high, but it came up and then it came down. So you're waiting to see if you can get close. You got rejection wicks on 30-minute here. Where candles were, you got to imagine this candle was extremely bearish at one point and then came back up and closed, a bullish candle. So the 15-minute didn't close outside the zone. At this point, we're waiting. It's a waiting game, right? We don't know where the market's going yet. This is why we look at 4 hours, at the 4 hour candle, and get our idea set. We go down the time frame and see if our idea makes sense. And then you wait on the smaller time frames, i.e. the 30-minute, the 15-minute, the 1 hour, for actual confirmations. Let's just see. This is not a range where you can trade gold in this range. You have to wait for a breakout to happen. Right, so we've got 2 minutes left for this candle to close. And it looks like, yeah, it's going to close in the zone. Now you got to keep in mind, London Open is an hour and a half away. So ideally speaking, we're going to wait for a close here. We don't want to take an impulse entry. It's not the right sort of not the right market structure for an impulse entry at the moment. We can't seem to get a candle closing outside of these ranges. So gold's consolidating. That means we wait. Let's just see exactly what's going to happen. Let's speed this up here a bit. Let's see how this is closing. So this is going to be a significant candle close. The reason it's going to be significant is because it's going to be the half an hour closing, the 1 hour closing in 6 minutes, and the 4 hours flip bullish and broken the high. You've got options here. You've always got options. You're always asking yourself questions. If you take a buy here and put your stops back in the zone, 18 pips, 17 pips, so you don't miss the trade, but you've got 6 minutes, it's better to wait for the candle to close. 5 minutes left. Wait for the candle to close and see what the entry is. Because if it escapes, if it runs away from you, it runs away from you. It's not the end of the world. If it doesn't close where you want it to close, that's going to be a lot more painful, right? So you've got 15-minute closing, you've got 30-minute closing outside of the zone, 1 hour's closed above resistance, which is great. The 4 hours broken the high, right? So because we can't wait for the high to be broken, because if you wait for the high to be broken, it's going to be 15 pips, and that's 15 pips that you could have had. You look at the 15-minute now, see if you can get a stop loss in the 15-minute. It's going to be 27 pips. That's quite a big stop loss. But because we obviously only work with percentages, you know, we've got we're not going to we're only going to be risking 2% of the trade, right? 2% of the account. That's all we risk, and we're always constantly prepared to manage risk. All right, that's our main goal. That's the only thing we can control in the market. Trade goes our way, fantastic. If it doesn't, it doesn't. We're going to lose 2%, and that's it. Right. And that's what I mean. If this top wick was a bit smaller, that would have been amazing. You know, then we could have looked at sort of waiting for the high to be broken and wait for continuation. This just came down and broke the low within the first 7 minutes of the trade. It's not going to be your day every day. You know, not every day is going to be sort of a Hail Mary. Right, so we've lost this trade. Now it doesn't matter what this candle does, this particular 30-minute candle. I'm not interested in entering any trades because I had my trade, I had my bias, I had the idea what I was going to trade. I traded that idea and it didn't work out. Is it the end of the world? No. We just move on. That's it, right? So the 15 minutes close for a strong sell. That's fine. If we get another opportunity for a buy, right up here, right? So 30 minutes coming up, breaking the high. The 1 hour's come back up. Cool. It's going to close in 15 minutes. The 15-minute has just closed. I'm going to wait and see exactly what it does and see if we can give our trade a second chance, right? That's all we're here looking to do. If we can give our trade a second chance. Can't, you can't. Cool. So once this candle flips bullish is when we'll be looking to take buys. If it does. If it doesn't flip bullish, comes back in the range, that's fine. We move on. So we're down 1% in the account. We'll make it back. Speed this candle up. See exactly what it does. And again, this is going to be London Open right after this candle. I want to see how this candle closes. Cool. Right. 30 minutes close outside of the zone. 1 hours again. So it's come down, it's done a retest. The 4 hours breaking the high again. in my opinion, this is a really good market structure. We're going to slow it down here a bit and see exactly how gold acts and what it does. Once the high is broken um, on the 15-minute, then we're going to give our trade a second chance. If it does, if it doesn't break, then it is what it is. We're going to call it a day at that point. Right, so we missed our entry. This happens. That's fine, not a problem. You can see, right, enter at buy. Again, we're going to have our 2% risk, and it doesn't matter what we do with the take profit at this point. So yeah, you missed our entry by 10 pips, 11 pips. It is what it is. And we're just going to see exactly how this trade plays out. So we're looking for continuation. So we got these trades here. Right, so I like the fact that that candle came down and started testing its own low. Doesn't look good for it at all. Okay. So we got the 15-minute closing in 3 minutes. See how the 15-minute candle closes. If the 15-minute candle closes bearish, then we will be calling it a day. There's no point of us continuing with this trade. So the 15 minutes closed, basically indecisive candle. It's not bearish, it's not bullish, nothing at this point. Let's see. We're going to have to wait for the 30 minutes close and see what 30 minute does. Exactly how the 30 minute wants to act out. So we've got 1 hour showing good signs for bullish momentum. We've got 4 hour, a lot of clean range to the top. 30 minute about to close in 12 simulation minutes. So there's clean range. Candle highs and lows are being that went fast. Candle highs and lows are being respected. So we're just gonna have to wait this trade out and see exactly what it does. Now 30 minutes closing, around 37 pips. Okay, see where 30 minute actually does close. See exactly where it takes us. So far it looks good. Cool. Perfect. So we're going to skip the 30 minute. Okay, so we're sitting around 30 pips. Right, so we're sitting at around 34 pips. Right, we're sitting at around $226 profit. This candle is looking to break the high within the first couple of minutes of the previous candle. Okay, now, okay, it's actually a very good trade. What I want to do is do the close part and close 80%. Remember, you always want to be securing. And then remove this TP, stop loss, add a stop loss, and I want the stop loss. Just put it at break even at this point, doesn't matter. I'm going to let it run. So let's skip over these candles, see exactly what the market does. Perfect. And we'll let it run. And it would have, right. At this point, 100 pips, it's fine. That's another 1%. That's cool. It's come all the way up to, yeah, basically New York Open at this point. Never going to hold a trade more than New York Open. I don't like the New York session. I don't trade it. I find it extremely volatile. I've never been profitable in the New York session. So I'm just going to close the whole trade at this point. Call it a day. It's fine. But if you review this trade and you look at both of these trades, so what we did, we came in, gold consolidated for a bit, It closed outside of the zone, which was waiting for it to close. We entered buys because, well, I entered buys because I didn't want to wait for the wick to be broken, as it's so what is that, 13 pip wick, 14 pip wick. That's fine. We had our stop loss on basically the zone, the previous support, which was also the 15-minute low. We waited for to see exactly, and it came down within the first couple of minutes, and it plummeted. We didn't panic. We didn't look to take a sell, even though we had clean range. Remember, we were looking at buys. The 4 hour had broken the previous high. We were waiting for buys. Okay, so we waited, and we got this particular scenario happen. On the 1 hour, gold again closed outside of the zone. Got clean range to the left. The 4 hour candle also, I believe, yeah. So the 4 hour candle was this one, also broke the high of the previous one again, and is moving up, which was great. The 30-minute candle gave us a very clean market structure as well for continuation. So we took our trade once this high was broken. The bottom wick was made first. It was perfect because the wick there was quite short, so it was 6 pips, 5 pip wick. We missed our entry, secured positions obviously as we were coming up, put everything on break even and held it until New York open. It's a simple trade, right? So it doesn't, just because you take a loss, that's the worst time for you to get emotional. If you feel like you're getting emotional because you took a loss, then just close the chart, come back the next day. You're not ready to trade for that day. You're going to make a mistake that you're going to regret. If you start chasing the loss, that's when you start seeing massive losses. So the same thing again on Wednesday. We come in, we mark our zones, we mark our resistance up there, we mark our support. We go over to the 1 hour time frame and we look for our zones on the 1 hour time frame as well. And obviously we want to mark everything up. Let's just go down here. Okay, so it's very clear to see sort of where everything is. All right. So we see we've got support here on the 1 hour time frame, and we've got a resistance up there, very small range. We've got quite a good range, so around 40 pips. And in here it's like around 40 pip range as well, so not really tradable range inside the zone, right? So on the half an hour time frame, tells a bit more of a story. Yeah, so like I was saying, we've got like 40 pips to the downside. I can't see anything. Yeah, it's just clean range to the upside on the left. There's nothing to stop this on the left. Yeah, anyway, so we saw that on the 1 hour time frame. Yeah, so if we look at everything again, we've got the 4 hour going up, not clean range to the left. The 1 hour has obviously been bullish since yesterday, but pretty much since the beginning of the week. It's been bullish. So ideally, buyers would make a lot more sense. If we can get a close below this area, sells could make sense to come down here and obviously take this 30 pip range. If we get a close and if we get something that makes sense to us. Not, we're waiting. And that's sort of what we're doing. So as long as you can be patient and you can understand sort of in the market what you're looking to do, then you got to stick to that bias. Gold's a crazy pair. Gold's just moving. So look at this. That's mad. 15-minute candle. Over 60 pip 15-minute candle. The reason I'm pausing the market here is because moves like this will happen all the time, especially in gold. And you can look at this sort of all day and just, it's your job to understand, can you find a comfortable entry there? Is this a sort of a move that you can catch? And you have to sort of come to the point and understand that, you know what, you're not going to catch every move in the market. Things like this are going to get by. This is going to happen. This is sort of a simulation of what actually happened on the 20th of November. For you to catch, are you going to enter sales here? I wouldn't personally enter sales here. It doesn't make any sense. Gold's already moved. You've got to wait. Oh, we skipped it an hour. Anyway, gold's already made market massive move down. you're going to have to wait for some sort of consolidation. You're going to have to wait for some sort of market structure, some sort of confirmation that gold can continue going down. At this point, you've got no confirmation, right? The only thing trying to give you possibly a confirmation is the 15-minute time frame. And let's just see what that does. If that looks like it's possible to even enter a trade in the 15-minute time frame, if it gives us an opportunity to do so. But even then, you got to ask yourself, right, how much does it make sense? Even if it does break these lows, you've got a support 17 pips away, and another support 50 pips away. Yeah, got support 15 pips away on gold. It's not something I'd be interested in. It will be a risky move. We're going to skip this part, and just see when gold gives us a market structure that we can actually understand. Right. Nothing so far. Nothing that I'd be interested in or comfortable in taking sells or buys. I'd want to wait for something that makes sense. Right. So that's good on the 30-minute time frame. Okay. 1 hour. Right, and the 15-minute. Let's see what it does. So gold, if you look at it now, because you're going to have to create new zones, because gold has done that. It's created new zones now. There's nothing you can do about it. You have to sort of adapt. You can't be working with these zones up here anymore. They're meaningless at this point. So gold is now, this is literally just after London Open. Gold is just consolidating in this range. It's not doing anything. Let me just delete this. I hate a busy chart. But yeah, gold is just consolidating now. London Open is just gone. It's just consolidating. So since we came into the market, we had this massive move down of around 150 pips, and we missed the whole move. Right, we missed the whole move. I didn't see any sort of valuable entry there. Even on the 1 hour time frame, gold had already moved, 80 pips down. I'm not going to sort of take a trade here and hope for it to continue in. On the 30-minute time frame, massive move to the downside, loads of resistance on the left. Gold's been bullish for the whole week, so I just want to see exactly sort of what it does. Right now, I'm waiting for the perfect entry. If I can get one, if I can't get one, it's not the end of the world. I'm up 2.2% for the week. I'm happy with what it is. So we're going to skip this till we get a close. So 30 minutes close like this. The 1 hour close bearish. 30 minutes close bullish with a massive wick to the top side. The 15 minutes giving us some sort of market structure. Right. So I'm going to take a trade here, but I'm only going to risk 1%. This is not sort of the best trade I want to take. Yeah. Okay, so it's going to do little 1 to 1.5 if gold continues down. If it comes up, there you go. Right. And that's it. We're going to call it a day. Wasn't the best day to take a trade. Didn't make any money. That's cool. Move over to the next day and let's see what Thursday gives us. If we can actually be profitable on a Thursday. If we can get some good market structure on Thursday. Right, so got the 4 hour continuing bullish at this point. The 1 hour is in a little consolidation range. It's not doing much at all. So patience is sort of the name of the game, and it's sort of what we're gonna have to wait and see exactly what we can get. So gold is just in this range at the moment. I'm gonna speed it up here a bit and see what it does. So the 15 minutes about to close. See how the 15-minute closes. We've got quite a bit of range to the top side. It closed, no top wick on the 15-minute whatsoever. How do I close this? Okay, so no top wick on the 15-minute there. So the candle closed, which shows that there's no range to the top side. The 15-minute isn't your strongest confirmation either. So we can see sort of, okay, yeah, in this case, we're going to have to wait for the 30 minutes close. So we're just going to skip to see how the 30 minute closes and see what it does. And okay, so 30-minute candle. Okay, it's actually quite a good close. It's closed above the zone. Right. The 1 hour is still open. Yeah, the 1 hour candle is still open. 4 hour candle has broken the high. Okay, let's just see if this when this candle flips bullish, and if this candle flips bullish, then we're gonna take our positions there, obviously for a buy. Okay, well, we're gonna enter our buy. Stop loss goes back in the zone. Take profit as whatever, doesn't matter, and let the trade right up. Obviously, we're going to get extra confirmations once the 30-minute breaks the high. Um, and we've got another 15-minute now closing in our favor as well. Bullish. So once this 15-minute breaks the high, then we've got very good confirmation for continuation for the buy side. So the 4 hours also broken the high. It's looking good at the moment. I don't know why this is giving us a 4 pip spread. 4 points. Some of you points. So yeah, let's open up the trade here. We can see exactly what the trade is doing. Let's leave that there. We'll see exactly what the trade is doing. So the 1 hour is closed, 30 minutes closed, and we see sort of what exactly what the 1 hour is doing. And it's perfect. We want it to come down first, make a bottom wick, and then come up and give us continuation. Right. So we've got all right. So we've got the 15 minutes of close bearish on us. This isn't a good time, but we're sort of concentrating on the bigger time frames, 30-minute and the 1 hour and the 4 hour, and we've got our stops on the 30-minute as well. So we're gonna have to see how this plays out, and that's what sort of waiting. We're gonna have to wait and see what the market gives us. Right, you need to know when you need to be too hasty in managing risk, and when you have to let trades ride out. All right. So that's actually really cool. So we've got 28, 29, 30 pips there. That's perfect. So yeah, we're just gonna have to see exactly where this goes from this point. What I'd want to be doing is closing partials right now. So around 30, 35 pips is where I'd want to look at closing partials in this trade. Let's see where this trade goes. Let's slow this down here a bit. Don't want to miss this. So yeah, so around 32, 35 is where I want to be closing partials. For some reason, I'm going to get it to stop at around 34, 35 pips. Okay. So 66 pips out of this trade. And this was sort of just a simple breakout entry at this point. We got very, very good sort of take profit up here. We're up 6% on the account. So doesn't matter sort of what trades you have, as long as you manage your risk and you understand where you're going to sort of take profits and how you're going to move on the trade, and sort of manage your emotions during the week. That's sort of the main thing. So we're going to close this, right? And the market's going to do whatever the market wants to do at this point. That's fine. Close the trade. you look at the trade history here, so it was a good example of a breakout. Very, very good close on 30-minute. Had our stops here, 27 pips, and it took 66 profits on there. And it was a breakout on the 1 hour as well, and it was a breakout on the 4 hour. It was breaking the high on the 4 hour, so it was very, very good confirmations all round. Um, and we ended up staying in the trade for a little bit longer. That's completely fine, not a problem. You understand the gist of it. It's a breakout trade. But yeah, so far this week it's Thursday, and we've made 6% profit. Now, this is London Open coming up, but we're done, right? I wouldn't take any more trades at this point. Gold can do whatever it wants to do. We're going to go over to Friday and see what Friday has to offer for us now. And Fridays, I like to, well, I prefer not to take any trades, to be fair, on a Friday. But we've got support up here. Gold's coming up to a resistance on the left hand side as well. This is definitely going to be market structure on the smaller time frames. Yep. So yeah, let's just see sort of what gold does. So these are massive wicks. These are going to be market structure on 30-minute time frames. So that's basically it. You're just looking from higher time frames to lower time frames and trying to understand market structure, and trying to understand exactly where price can go and what ranges you're working with. Mix that in with a bit of patience, and you've got yourself a very, very good strategy to actually move forward and make money. But yeah, so you've got pretty much this on the 15-minute. So you've got this on 30-minute. You've got, let's see if that matches up. Okay, cool. So there's a little fake out on the 15-minute. We'll just leave that there. That's fine. On 30-minute, you had a very, very good close here for continuation. If this kind of broke the high, it didn't. It came down, broke the low. That's why, especially in that sort of situation, you want to wait. I don't know why it keeps jumping to like 1,000 ticks. So at this point, you're just waiting and just see sort of what can happen. We know if we can get a close above here, on a good time frame, like a 30-minute time frame, 1 hour time frame, then we've got a good chance for continuation of gold moving up and filling this wick, which is like 30 pips. If we don't get a close up there, then it is what it is. And it's a Friday. We don't want to risk. We don't want to take any risk and risk losing our 6%. Right? You got to imagine like 6% on a 100K account is 6 grand. On a 200K funded account, it's 12 grand. You know, so it's not about sort of the money at the moment. It's just about you having to concentrate on taking the best trades, the trades that make most sense. So on 30-minute, we got close back in the range. The 1 hour is still open at this point. The 4 hours, well, this candle's already broken high, but it's coming up to resistance. It has got a wick to fill, but we're gonna have to wait for some close. If we get one, if we don't, then we call it a week. Walk away with that 6% and call it a week. That's fine. But we're gonna have to wait for at least one candle to close above this zone. At least one candle to give us closure. So at one point, this candle was bullish. At one point, this candle was bullish and left wicks to the top side, right? So I'm not looking to take an impulse entry on Friday, for hopes that we can get sort of a wick fill off an impulse. You have to understand and what you're willing to risk. All right, so that's broken the high, so that's quite sort of a good move there, 35 pips. Not something obviously we're involved in, so we're just gonna sit back and watch it play out and see. The only way it would possibly make sense to enter a trade is gold to come down, do some sort of retest, some sort of support, and then it can continue going up. So if it can come down, do a retest here, a support, and give us continuation. Even if it does that on the 15-minute, great. If it doesn't, then it's just it is what it is. The trade's going to leave without us, and we leave the market with our 6% profit. So at this point, it's just watching this play out and understanding exactly what you want to see. Right. So that's good. We got a bearish close. It's good. That means gold is coming down to make a support to give us some sort of market structure. If we can just get something good plan out on the 30-minute as well, and then that's going to be great for us. At this point, we have to wait for candles to close. And that's what trading is. Trading is a waiting game. We get paid to wait. We don't get paid to trade. Right. So what it's done there on the 15-minute, it's created support. It's come down. It's created support. It's coming up and it's breaking the high. On the 30-minute, it's breaking the high. This is a very, very good setup for an impulse entry. The only thing I don't like about it is breaking high in the first 20 seconds. I'm expecting this candle to reverse. For me, again, like I say, I'm a very, very cautious trader. I don't care if this candle goes up 50, 60 bips. That's fine. It just wasn't meant to be. What I want to see now is give this candle sort of an opportunity to come down and test its open price. Give us an entry that makes sense without breaking its low. It's not going to do that anymore. That's fine. So we've obviously missed this. We're going to skip it, right? But keep this in mind. This little setup here, and that's sort of like on the 30-minute. So on the 15-minute is come down and creating support and then continuing, and that's actually a very, very good setup. So this is the best thing about simulation, about back testing. You get to see things like this, and it doesn't affect you in the market, and you can stop it, you can replay, you can go back, you can make notes. And this is a setup I take in the markets quite regularly, but not if it breaks the high in the first minute or two. It makes me uncomfortable at that point. I'm always expecting it to come down and make a bottom wick first. But yeah, I mean, it looks like we missed everything on a Friday. That was probably the move to take. This is London Open now. It's Friday. It's the end of the week. You'd be done trading at this point for the week. But yeah, if we look at and review sort of everything that we did, and just to go back here, if we open up trades, history. So right there you go. So we can see right on the 18th. Cool. Right. So we started this on the 18th. So on the 18th, the first thing we did when we came in, first trade we took. So the first trade we took, we closed partials, I think, and then we took a BE. Oh, yeah, so that's the first thing we did. Remember, this candle also very similarly broke the low straight away, and it came down, and this is the 1 hour time frame, and it came down 50 pips, and we took 25 pips out of it, and the rest came back to break even. If we look at this market structure on 30-minute time frame, you guys can review this as well, but if you look at this market structure on 30-minute time frame, I was trying to see why this is. So let me move back. The 18th. Yeah, so it was here. So we had a good close outside of the zone, came down, and we took it, and obviously it put ourselves to break even. It was the first trade. And then we had a trade here on the 19th as well. This is the one where we took a loss, and we waited for a retest for it to come back up and break that zone again. We took an entry, and we made a healthy profit, and we closed partials and let the rest run, which was great. And this went sort of on the whole week, and this is just showing sort of waiting for breakouts, being patient, and understanding what you want from the market. And we ended up, with 6% in profit. So these were the trades, and this is what we took. Um, and it's really really good in terms of a weekly trade. So we had 1, 2, 3, 4, 5, 6 trades, I believe, that we took. Um, and we had 1, 2, 3, 4 wins. Yeah, 4 wins and 2 losses, which is a fantastic week. And still to be up 6%, it's just managing risk and being patient.